Joining us now, Rashaun Williams of Manhattan Venture Partners. Good to see you again. Welcome back.
Hey, thanks for having me, Scott.
So we'll get to ARM specifically in a moment, but you heard David Solomon. He feels pretty good, better at least, he said, about the overall market. Do you?
Yeah, I do. And I guess the best quote I can give you is delayed does not mean denied. I mean, we've been sitting here waiting, all of the tech investors, all of the venture capitalists, and we all believe there's a trade for every season. And right now, the trade is the multiple expansion trade. We were in the risk off season. Then we entered into the smart money trade where you're buying distressed assets at great assets at distressed prices. Now everyone's expecting multiples to expand. So everyone's jumping into the pool. That's why you see 5 times oversubscribed, deals that are being pre-sold before they're even launched. And then we'll normalize back into kind of chasing normalized earnings growth when the economy kind of settles in and everything starts going up for at least a year or two.
He couched his optimism at least somewhat on the idea, as he said, that, assuming ARM goes well, right? The industry needs it to go well. What do you think is really riding on that IPO, given the size, the nature of the demand that's around it, and just it's so big at a time where there's been absolutely no activity?
Yeah, I think a lot is riding on it. And then, look, this is right on brand for SoftBank, right? It's a massive deal, massive multiples to earnings, super oversubscribed type deal. We haven't seen these types of books in a while. But it's one of those deals where when you have a company selling a business that they own completely, they can control the amount of shares that are listed. They can control the books. They can control the valuation and everything. It's one of those manufactured IPOs. And I think they're going to do it right, because so much is riding on it, and I think it's going to open the floodgates for everyone else.
So who else should we have our eyes on? Like the Epic Games, the Stripes, the companies that you keep hearing about are in the proverbial pipeline, but we really don't know what the status is of how they're looking at the current environment, nor do we know how they see the calendar right now.
Yeah, I think you mentioned some of the names that I like, but I'll tell you one that's my actual favorite, Turo. A lot of people don't talk about Turo. We obviously see that they announced today that they're getting ready to tap the market again. Everyone sees what's going on with Instacart. That's a highly anticipated transaction. Epic Games, which owns Fortnite. Anyone with kids will tell you how exciting that is to everybody. One of the most profitable monster businesses in the private market right now. But also don't forget about Stripe. I'll give you 2 names that you probably haven't heard anybody throw out there too. Noble fitness apparel company, Therabody, percussion gun. These are 2 companies that are growing like wildfire in the private market. Everyone's talking about them, dominating their industry. They're going to list as soon as public sentiment for consumer-facing businesses starts to improve.
Are you guys investors in those?
Personal investor in some of them. VC fund is invested in Instacart, and of course, Turo, one of my all-time favorites.
Okay, got you there. And you mentioned multiple expansion earlier, which in many respects is why we're here in the first place when we talk about names like Apple and Microsoft, NVIDIA, and on and on and on. And the reason why the NASDAQ has had such a great year, it's been largely on, if not exclusively on, multiple expansion. Now the earnings have to put up or shut up, right? And do you think they will?
Well, it's not just about earnings in this situation. I think that's the moral of the story in this type of economy. But when you deal with multiples, if you think about cybersecurity, for example, cybersecurity multiples were 15 times all the way to 90 times revenue 2 years ago. Now they've collapsed down to, call it 5 times to 20 times. So when you put more water in the ocean, all ships rise, right? So even the ones that miss earnings on a quarterly basis will still rise and do well. But of course, the ones that hit earnings, the ones that are growing the fastest, are going to be the darlings and the sweetheart of everyone's portfolio.
We'll talk to you soon. Always enjoy it, Rashaun. Thank you.